Picture a woman called Elena. She was 58 years old, she had a good job, she had plenty of savings, 40 years of savings. Now, she wasn't rich, she was just responsible. She did every single thing right. And then one morning in December 2001, she woke up, walked into her bank in Buenos Aires, and the doors were locked. And I mean permanently locked. The Argentinian peso had collapsed overnight. Her savings, every single peso she ever worked diligently to save and earn, were worth less than a third of what they were the night before. Now, she didn't see any of that coming. Nobody warned her. She was just the collateral damage in a system that never told her it was breaking or indeed creaking. You feel something right now, don't you? After me talking about Elena. You feel uneasy, maybe even a little defensive. You're thinking, that's Argentina. Why is he talking about that? That can never happen to me. It can never happen here. And you're right. It won't happen exactly like that. It will be slower. It will be quieter. It will be more deadly. Now, hello, my financially disobedient, quietly panicking, mildly furious citizen of this thoroughly bewildering economic moment. Your dollar, your pound, your yen, the one in your savings account that you think is safe, the one in your pension pot that you believe is growing, in your salary, it's lost 10% of its purchasing power since early 2025. Now that's not a projection, that's now. Coffee, I'm sure you've noticed, is up about 20% in the last year alone, and import prices are up 5% in the last 12 months. And real inflation, the one that shows up in your actual life, not the government spreadsheet, is running faster than Usain Bolt could even keep up with. A dollar earning 4% interest rates while inflation runs at 7% is encountering a mild economic heart attack. That's a dollar that is shrinking every single day at an alarming pace. Now, you're not saving in that environment. You're hemorrhaging. You're bleeding out deliberately and slowly. And here's the part, if the aforementioned hemorrhagic fever didn't already forewarn you, this is the part that should genuinely concern you. This isn't happening because of bad luck or a market cycle or something that will fix itself when the right politician eventually gets elected. This is happening because of a chain reaction, an unstoppable one, triggered by a single meeting between a Gulf state and a US Treasury, and it's now working its way through the global financial system and heading like a freight train to a cinema near you. Directly into your mortgage, directly into your hopeful retirement, your grocery bill, and your ability to afford the life that you thought you deserved and duly earned. You feel that, don't you? That uneasy feeling, the mix of anger and helplessness, that feeling of I work hard, I save, I did everything I'm supposed to do, and somehow I'm still getting royally shafted. Now, this is the crisis no government can print its way out of. So who am I and why am I holding this delectable Chinese tea bag? Well, my name doesn't matter as much as what you're about to learn. And here's why you should listen for the next 10 to 12 minutes. I've spent 25 years in financial markets. I've worked in the City of London. I've interned at investment banks when trading floors still smelled of ambition and bad decisions. I sat in the rooms where sovereign wealth funds moved markets by simply raising an eyebrow and clearing their throats. When I tell you something is coming, it's not because I read it on Twitter. It's because I've seen the early chapters of this story before, and they always play out in the same prosaic way. And the chapter we are in right now, you need to understand it immediately before you flick on and skim read the next few pages. Now, when you work inside investment banking, and I mean really inside of it, you see things that make the news look like a children's book or like it's scripted to an unassuming, unaware audience. Now, early in my career, I was in a meeting room in London, gleaming table, excellent coffee, excellent croissants, and then a representative from a Gulf state sovereign wealth fund walked in. Immaculate suit, polite, unhurried, the kind of calm that only comes with controlling $700 billion of assets. He sat down, he said, and you could hear a pen drop, "We are reviewing our allocation to dollar assets." Now that sentence, only 7 words, sent a shockwave about 7 megatons worth of nuclear weaponry. Because when someone who holds that money says they're reviewing something, they're not making small talk, they're threatening you, they're signaling, they're negotiating, and they are warning. What you are about to understand is that it's not just one man in one meeting room anymore. This is Japan, this is China, this is Kuwait, this is UAE, this is South Korea. All of them, all at once, all sending the exact same signal that everyone is royally about to be shafted. And when you understand what that signal really means, it will completely change how you see your financial future forever. So here's what you need to know, and I'm going to give it to you in a framework. 3 steps that I call the survival protocol, mixed in with the domino effect. Because when you understand this and you move away from being a victim of the system to someone who actually sees what's coming and acts accordingly, we're all going to sleep much better. So, number 1, the end begins. What broke the system that protected the dollar? Number 2, the hidden tax, how that break travels silently into your everyday life. Step number 3, the escape hatch, where the money goes to survive when the dollar inevitably wobbles. So stay with me, because when you see all 3 steps, you won't look at your bank account or this Chinese tea in the same way ever again. So here's where the end paradoxically begins. The Strait of Hormuz, a waterway now we know 21 miles wide, a fifth of the world's oil, all of that good stuff. It's effectively shut down. When the strait closes, the oil stops flowing. When Gulf oil stops flowing, the UAE, one of the wealthiest nations on earth, with 270 billion in foreign reserves and trillions in sovereign wealth, suddenly has a big problem. It's a cash flow problem. The country that builds man-made islands in the shape of palm trees just for fun. Yeah, they can't make their payroll anymore. Not exactly, but close enough that they walked into a meeting with the US Treasury Secretary Scott Bessent and said, "We need a dollar lifeline, or we're gonna start repricing our oil in Chinese yuan." And Washington moved faster than it has on anything in years. Just those 6 words, "We might use the yuan instead." Because here's what you need to understand about the petrodollar system. Since 1984, every single barrel of oil sold anywhere on the planet has been priced in one denominator, in dollars. Every country that needs oil, they need dollars. And every country needs oil, so they need dollars. And every country needs to hold one thing, dollars. That single deal, the petrodollar deal with Saudi Arabia, gave the US dollar a superpower, dollar hegemony. Everyone needs a permanent supply of dollars.
It is very simple. You must buy oil with paper. But it is all just a giant illusion.
And that's why when you see crises around the world, especially energy crises, there's a massive bid to the dollar. Everyone needs to go and rush and get it. Now, here's where it gets truly personal. The hidden taxation that funds everything. When the strait shuts down and the oil stops flowing smoothly and easily, countries that export oil, for example, Kuwait, they sold a sum total of approximately 0 barrels when the strait shut down. That's the first time it's happened since Saddam Hussein invaded in 1991. They lost all of their dollar income overnight. And the countries that imported the oil, think Japan, think South Korea, think India, Thailand, they suddenly needed dollars desperately to pay off all of the energy that their economies run on.
The dollar buys time.
And when you need dollars fast and you're a central bank, you sell the most liquid asset in the world, which are United States Treasury bonds and, in some cases, gold. Japan, they dumped 30 billion in a single quarter. Chinese Treasury holdings are at an 18-year low. Dollar reserves at the New York Fed hit their lowest level since 2012. In 1 month alone, 240 billion in government debt from the United States was sold globally. When you see that level of selling, all that supply hitting the market at once, the price of bonds fall. And when the prices of bonds fall, the interest rates have to rise. Always. It's a mechanical thing. They move in opposite directions, no exceptions. And that's why your mortgage rate is going up, your credit card rate is going up, your student loan is going up, and your retirement prospects are going down. So what are you feeling right now? Fear? Yeah, probably. Scariness, quite possibly. I mean, it's completely reasonable and logical to feel scared right now because that's the correct response.
They are completely ignoring them. We are definitely going to need a much bigger cup.
But here's the part that should make you even more uncomfortable. The Fed, the organization whose one job it is to set interest rates, they can't fix this because they can't print more oil. They're telling everyone it's steering in the right direction, but in fact, the $30 trillion market doesn't care about press releases. It's the tail that is wagging the dog. And the dog in this scenario, unfortunately, is you and your savings, and it's about to get whipped around like a greyhound at a course.
The market is out of control. There goes my 401k.
Now, the people who print the money don't want to keep the money they print for one reason. If that doesn't cause you some form of existential financial disturbance, then I genuinely don't know what slap in the face is going to actually wake you up. And here's the part that nobody says out loud, because when this Iran war ends, when the Strait finally opens, and it will, and when the oil starts to flow again, and it will, the dollar won't recover. It will fall even faster, because when the dollar was being artificially supported by the crisis-driven buying, when the crisis eases, the structural decline resumes. Goldman Sachs, JP Morgan, they all agree, another 10% down minimum.
Why is it going up? I can't afford this.
So what you're watching right now is the end of the dollar era as the world has known it. It's not a crash, it's nothing apocalyptic like people say, it's a demotion. But a demotion is definitely something real. A slow, grinding, irreversible transfer of economic power. And what's sitting in the middle of all of that? Your savings, your retirement, your 401k, your children's future. Okay, right, step 3, because I promised you something and I'm going to deliver on it, because I'm not like all of those other charlatans out here over ring lights. But nonetheless, the escape hatch, because you didn't come here just to feel awful or to doom scroll. Here's where the smart money is already moving. And when you see this pattern, you understand why this isn't optional anymore. It's pure, unadulterated survival mode. Number 1, energy, oil services, well-positioned producers, makes sense. Number 2, gold and gold miners. Yes, I know your grandfather's investment, I know that. But your grandfather also didn't have to watch central banks buy 4,000 tons of the gold stuff in 4 years. Sometimes boring is correct, and sometimes boring, my friends, is up 100% on a year. Banks and insurance companies are my next play. Higher rates means fatter lending margins. Selected financials are already prospering in this environment. And overall, just hard assets broadly. Anything that holds its value when the denominator, which is your paper currency and your wallet, is losing its purchasing power faster than a man's appeal in his... that analogy didn't work, I'm sorry. But what you need to avoid is this. Right now, today, before anything plays out any further, you need to avoid those long duration bonds, unprofitable high-tech growth, REITs with floating rate debt, all of those small caps drowning in leverage. That's the real thing you need to avoid. The hidden tax is real. It's already happening. Your coffee is up 20%. It's more expensive for everything. Your groceries up, your purchasing power is down, and most people haven't connected those dots to a narrow waterway in the Persian Gulf. So here's the thing about every financial crisis in the last 100 years. The people who got destroyed weren't actually stupid. They weren't reckless. They were actually responsible, but they were one thing. They were uninformed. They trusted the system to tell them that the system is breaking. The system never is going to tell you that, I hate to tell you. You feel something right now. Maybe it's anxiety, maybe it's anger, maybe it's that specific nauseating feeling of realizing you should have known this much, much sooner. All of those feelings are appropriate, albeit frustrating, and all of them are useful, albeit only if you act upon them duly. The dollar era isn't ending tomorrow irrespective of what someone on television tells you. It's going to end in stages. And like that famous quote, I didn't go broke all at once. I went broke slowly and then all of a sudden. In the layers, in the onion peels that happen in between the crises, in the quiet creep of things costing a little bit more every single month, and the trusted savings account that was meant to protect you no longer doing so. So now, you know something that most people genuinely don't, but what are you going to do about it? Are you going to sit on your hands or are you going to actually do something about it? Now, share this. One person, that's all I ask, because the more people who understand what's actually happening, the harder it is for it to happen to all of them at once. I'll see you on the next one. Stay curious, stay uncomfortable, and for the love of everything, diversify before the next domino falls. Ciao for now.
Governments never announce attacks. They quietly change the rules.